With that, first of all, thank you for joining. I'm going to switch back to German in the first part, and then later on, when we do the more of a conversation, we speak in English. Also, jetzt nochmal auf Deutsch. Ich darf Sie alle ganz herzlich begrüßen zu unserem Webinar. Wir recorden das Ganze und setzen es nachher auch nochmal auf unsere Webseite. Und vielleicht noch ein kurzer Hinweis vorab. Ich muss ablesen, weil das sind die Legal Terms. Dieses Webinar dient ausschließlich Informationszwecken und stellt keine Anlageberatung oder ein Angebot dar. Wir teilen unsere Einschätzungen und Erfahrungen. Diese sollten jedoch nicht als Grundlage für Anlageentscheidungen herangezogen werden. Vergangene Wertentwicklungen sind kein verlässlicher Indikator für die Zukunft und Anlagen können im Wert steigen oder fallen. Mit der Vergangenheit kein verlässlicher Indikator. Is past performance, Akash, let's think about it. Past performance isn't a guide for the future, but sometimes I think it's a pretty good indicator, right?
Yeah, it's I think good starting point
Yeah.
to evaluate,
So
and
we
the
have-
longer the time horizon.
Yeah, so we have a slight comment here for the legal side of things. And wir kennen diesen Kommentar immer in allen Dokumenten, aber vielleicht als kleiner Hinweis dabei. Und zwar Folgendes machen wir. Wir haben 45 Minuten Zeit. Wir würden gern ein bisschen einen Jahresrückblick machen, also ein bisschen auf die Themen zu sprechen kommen, die ich im Letter schon angesprochen habe. Gleichzeitig natürlich einen Ausblick machen in die Zukunft. Sie haben die Möglichkeit, Fragen zu stellen. Das machen wir dann am Ende. Also wir haben eine Q&A-Phase. Sie können in diesem Q&A-Box können Sie Fragen eintippen. Ich würde gerne am Anfang für all diejenigen, die uns noch so nicht so wirklich gut kennen, vielleicht ein bisschen eine Intro machen, sodass sie überhaupt wissen, wer sind wir und was machen wir hier. Und zwar mit drei einfachen Inhaltsblöcken. Das eine ist, warum machen wir, was wir machen? Was treibt uns an? Das zweite ist, wie wir investieren, also wie setzen wir das Ganze um? Und letztendlich das dritte ist, was machen wir konkret? Vielleicht ist es eine ganz gute Gelegenheit, so ein bisschen zu starten, mal so in die Vergangenheit zu schauen. Wir sind jetzt ja im 14. Jahr von P&R. Und ich habe damals in meiner Karriere habe ich gestartet auf dem Trading Floor von damals Citigroup, also einer großen Investmentbank, immer noch einer großen. Damals war es die größte Bank der Welt. Und ich war dort im Bereich Derivate und strukturierte Produkte. Und was mich genervt hat, ist, dass ich nie so wirklich von diesen Produkten selber überzeugt war. Und ich wollte eigentlich wirklich etwas tun, wo ich wie als Koch mein eigenes Essen esse. Und mich hat das immer genervt, dass ich dachte, eigentlich muss man das anders machen. So, und irgendwann habe ich gemerkt, okay, ich muss was ändern. Und habe dann nochmal ein MBA gemacht in London und New York und habe dann den großen Traum gehabt, meinen eigenen Fonds zu starten. Und das habe ich halt umgesetzt. Und mein großer Anspruch ist, dass das, was wir tun, aus Überzeugung passiert. Also, dass wir wirklich dahinter stehen und dass wir überzeugt sind von dem, was wir tun. Und 2018 habe ich meinen Co-Pilot Aakash mit an Bord genommen. Vielleicht switchen wir kurz auf Englisch. Aakash, in 2018 we met and you took my mentorship and
Yeah.
I just said in German that, what I would like to do is something where I'm really convinced of. And I think there was a big alignment when we met, right?
Yeah, 100%. For me, sort of, I think you were telling about the background, but very briefly, quite similar when I was at Bridgewater on the trading floor also, but then met you, and that was a sort of transformational point, not only for my work, but for my life. So it's been great.
I hope in a good way.
Yes, I think so.
Ja, also das war im Grunde genommen der große Ansatz für uns, etwas zu tun mit Überzeugung und natürlich auch mit verschiedenen anderen Prinzipien. Also zum Beispiel eines der Prinzipien, Think for yourself. Das ist sehr einfach, aber an der Börse ist es, glaube ich, enorm wichtig, denn an der Börse passiert so viel an Kursbewegung, gerade momentan, sodass man sehr oft denkt, andere wissen mehr als man selber. Und ich glaube, es ist ein gutes Prinzip, darauf zu verharren, zu sagen, okay, was verstehe ich wirklich selber? Was weiß ich selber? Und an der Börse gewinnt man, glaube ich, nur langfristig, wenn man selber seine eigene Meinung bilden kann. So, das ist vielleicht ein kurzer Intro, warum wir das machen. Wir machen das aus Begeisterung. Das zweite ist, okay, wie machen wir das? Wie setzen wir das um? Und dabei ist, glaube ich, eins der wichtigen, wenn nicht wahrscheinlich das einzige Prinzip gelten, nämlich das Prinzip Preis versus Wert. Also Benjamin Graham, die wirkliche Lehre des Value Investings. Preis ist das, was man zahlt und Wert ist das, was man bekommt. Und präzise ausgedrückt, mathematisch ausgedrückt, der Wert ist der Barwert aller zukünftigen Cashflows eines Unternehmens, abdiskontiert mit einem Reasonable Discount Faktor, sodass man einen Barwert auf heute bekommt damit. Und deswegen ist unser Job das Abschätzen, das ist eine Schätzung der zukünftigen Cashflows eines Unternehmens. Wir verbringen damit fast die gesamte Zeit, neben Admin und anderen Dingen. Aber wir verwenden sehr wenig Zeit auf die Interpretation von Charts oder von Kursbewegungen. Also der Preispart. Wir gucken nur auf den Preis, um zu verstehen, was kannst du heute dafür bezahlen oder was musst du dafür bezahlen und was kriegen wir dafür. Das ist unsere Schätzung des Wertes. Und das ist das wichtigste, der wichtigste Part unserer Aktivität. Und wir haben ein Framework, einen systematischen Ansatz, um zu einfach zu kommen, wie wir über die Bewertung eines Unternehmens nachdenken. Und dann geht es darum, Situationen zu finden, wo die Diskrepanz zwischen Preis und Wert natürlich möglichst hoch ist oder auch ausgedrückt als Margin of Safety, Sicherheitsmarge. Und wir versuchen, solche Situationen zu finden. Und vielleicht nochmal ganz interessant, auf dem Spektrum von Value Investing gibt es unterschiedliche Möglichkeiten, das anzuwenden, dieses Prinzip. Das eine ist vielleicht so die Balance Sheet-orientierte Art und Weise, das was Benjamin Graham ganz früher gemacht hat. Auf der anderen Seite würde ich meinen, ist vielleicht so die Compounder-Seite, also wenn man Unternehmen versucht zu finden, die Gewinne nachhaltig reinvestieren können und damit so eine Compounding oder so wie ich es nenne, mal eine Zinseszinsmaschine zu generieren. Und das ist unser ja, Steckenpferd. Das mögen wir. Wir lieben, gute Unternehmen zu finden. Wir lieben es, mit Unternehmern zu sprechen. Und wir sind fasziniert von Firmen, die das außergewöhnlich gut können. Und wir versuchen, diese Unternehmen frühzeitig zu finden. Und da sprechen wir gleich noch ein bisschen mehr drüber, warum das so wichtig ist, die relativ früh zu finden. Vielleicht noch ein Hinweis zu der Umsetzung. Also konkret jetzt schon oder bevor wir sagen, wie wir es machen oder in was wir investieren, vielleicht noch zwei Aspekte zu der Art, wie wir investieren. Das eine ist konzentriert, also wir verwenden sehr viel Zeit auf die Analyse. Das heißt, wir können auch konzentrierter investieren, weil unsere Hürde höher ist, über die jede Idee drüber kommen muss. Und das Zweite ist, wir tun das manchmal als engagierter Owner. Also wir sind sehr nah am Management dran, nicht überall, aber da ist, wo es notwendig ist, oftmals bei kleineren Firmen, da sind wir engagiert. Wir sind auf dem Aufsichtsrat. Bei einer Firma bin ich der Chairman, bei Software Circle. Und wir versuchen auch da Wert zu schaffen, indem dass wir guten Input oftmals im Bereich der Kapitalallokation weitergeben an das Board oder sogar auf dem Board selber. Und dann letztens, was machen wir? Also in was investieren wir? Wir haben in den letzten Jahren sehr viel in sogenannte Serienakquisiteure investiert. Im letzten Letter habe ich auf zwei insbesondere zu sprechen kommen können. Das eine ist Judges Scientific, das andere ist NGTG in Japan. Wir sprachen auch über Brockhaus in dem Letter, was wir verkauft haben, weil sich herausgestellt hat, dass es eben doch nicht in dieses Konzept von Serial Acquisition dort reinpasst. Aber das ist eine wunderbare Art und Weise, diese Compounding, diese Zinseszinsfunktion zu erreichen. Und da sprechen wir gleich noch ein bisschen mehr drüber. Ähm, Okay, mit der Intro würde ich sagen, machen wir es ein bisschen interessanter und bringen Akash mit rein. Ich hoffe, das ist okay für die deutschsprachigen Zuhörer, dass wir jetzt auf Englisch switchen. Manchmal ist es bei mir in Denglisch, also da werden noch ein paar deutsche Brocken vielleicht mit reinfließen. Ich stelle dazu die Sprache um. Augenblick. Speaking language is now English, so dass die Übersetzung funktioniert. Okay, so with that, Akash, we bring you in. Um, where shall we start? If we think about last year, how has last year been?
I think last year was interesting because, as you mentioned in the letter, there was a bit more turnover than usual. We had three new portfolio positions. We went to Japan. It was a great experience in itself, but I think it was continuing to learn, which is the best part of this journey, right? To keep improving on your processes and what your knowledge of how the world works. So it was good.
Yeah, I think Japan is exciting. I spoke a little bit in the letter. The learning that we had was that um, first of all, it's an exciting change in the culture towards capital allocation, right? That a lot of businesses now are opening up for more efficient use of shareholder capital. So you see many more buybacks. You see that activists actually are successful. Whereas previously, for many years, I think they tried, but there was a lot of resistance
Yeah.
amongst the companies that had dominant shareholders, which is quite common in Japan. And at the same time, you see a lot of stability there, right? Unlike China.
Yeah.
I think that is what we got away. We visited some really interesting companies there. Which one do you still remember you liked a lot?
Apart from the one we own,
Apart from NGTG?
NGTG. Well,
Yeah,
there was Hikari Tushin, which is
yeah,
the Berkshire of Japan, which was quite interesting, right? When we went to their office,
yeah.
it was completely
Oh yeah,
frugal. It
it
looked like
it was an ugly office, gray, old furniture, squeaky chairs,
yeah.
and it was so bad that I almost thought they did that on purpose just to impress the shareholders who look for value. Yeah,
Yeah, yeah.
yeah. The other one is I think Japan Elevator.
Japan Elevator Service,
Yeah,
another very beautiful
yeah.
business. Yeah.
I remember the moment when we exited the meeting room, and you have the Japanese tradition to, say goodbye by bowing down, and then we went into the elevator, and we were both sides, the people from the company, and we were bowing, and the doors didn't really close, and so
You kept going
it was an awkward situation
non-stop. Yeah.
where we thought,
Who,
okay, press the button,
who's going to give up
press
first?
press the button. So there's this cultural aspect of Japan as well, which is really great if you travel there. So that was an
Yeah.
exciting journey.
Yeah.
Yeah.
And then the last aspect I'd mentioned, just specifically for investment, I think with the serial acquisition theme, Japan is a very unique and special place to apply that, which NGTG is doing for a few reasons which you've spoken about. But a couple of just high level points is there's an aging population where need to there's a succession problem, and NGTG solves that. And there's a huge supply of these companies, which means the multiples are very attractive. And I'd also say there's also less competition because, as we discover when you go there, it's very difficult for an outsider to just come in and say, we'll do the same model there. So I think there's some barrier to entry too. So I think from a perspective of serial acquisition, Japan is very interesting.
Yeah. Yeah, I agree. So the apparently NGTG is the first and only serial acquirer listed. There were
In manufacturing,
in
yes.
manufacturing. There
Yes.
were a few others already. We
We
visited
met,
one,
yeah,
and we don't want to mention that name maybe because it didn't convince us.
correct.
I think that was far away from our kind of guardrail of what a good serial acquirer should look like. And we can speak more about that part. Um, why don't we do that? I think for viewers, it might be interested to really understand, okay, what do they mean by serial acquirer? Why do they like it so much? And what actually is a serial acquirer?
Yeah.
Shall we
Do you
do
want?
that?
Yeah, we can do that. Do you want to do it with the presentation, or should we just go into?
Oh, yes, good point. Good point. So let me bring up the presentation because we prepared a few slides. No, share, hang on.
I think you. Yeah, there we go.
This one, and here we go.
And then let's share.
Share. And I hope you can see that now. Hang on, I have to make it big. There we go. Okay. So, there's a title, you know about that. This is the first slide that we'd like to show. We just have a few slides, but I think they're really interesting. So, let me start, and then Aakash, you can take over. So this is just looking at the past performance, very simple stock price performance over the last 10 years. And you see on the left side, we have put up a European small cap ETF from comparison. Then there's the World Index, which is an ETF on the MSCI World. We always use the ETFs because A, it's tradable, and B, then we don't have to pay chunky license fees to MSCI World for using it. And then you see with 15.3% CAGR, you see P&R Serial Acquirer Basket. Tell us more about what that is.
Yeah. So as we've evolved in our journey and think that this is a really lovely business model to create outperformance over the long term, over time we have started collecting all the serial acquirers we can find, and very simply defined as companies that can reinvest a large majority of their free cash flow back into M&A. And so at this point, it stands at 143 companies of which we call serial acquirers. So this 15.3% is the sort of unfiltered performance of these 143 companies, serial acquirers, over a 10-year time frame and the median return. So that in itself, I think, is quite astounding. When I first saw these numbers, like, that's a really strong performance. And there's no selection here too to say which is good, which is bad. It's the whole basket. And it's a significant outperformer, just that basket over the world index, and of course, a much bigger gap to the small cap index.
And perhaps just very basic. Why do we always show these annual compound annual growth rates? And in short, for the English speaking people, it's easy CAGR, Compound Annual Growth Rates. In German, es ist die annualisierte Zuwachsrate. In for many investors, they are just used about the actual performance, right? That you say, okay, I bought something at 100, I sold it at 300, so that's 3x, or it's 200% plus. But that view does not take into account the time it took to make that gain. So the CAGR is the better way. And CAGR long term, if you think long term, which we do, CAGR is the one metrics you want to maximize. So actually, if you want to ask us something like, what's the one financial metrics you want to maximize or succeed in, I would say it's my lifetime CAGR. It's the compound annual growth rate over my lifetime. Warren Buffett with Berkshire Hathaway came close to, or about 20%, which is stellar. And you will see that it's very easy to double your money in any given year because you bought Rheinmetall or something like that. However, if you stretch that out over many years, it's much, much harder to get really to astronomical numbers there. In fact, if anybody told me he did like 35% over the last 30 years, I would very much doubt that. There are some exceptions, having said that, but it's very, very unusual. MSCI is very good over the last 10, 12, 13 years with around 12% in euro. But that is already up there. Most active managers can't beat that. And we are in a race with it. So that's why we always use the CAGR. And here you clearly see the difference might not sound much between 11.4 for the world index and 15.3 for the basket, but over time, that's really, really meaningful.
Enormous.
Yeah, it's enormous. Okay, and then the last one, 27.5. What is that one?
Yeah, I just wanted to showcase that I mean, ideally, and our intention is to not just invest in a basket, right? We are interested investing in concentrated fashion and finding the best of these serial acquirers ideally. And it's just to say the top quartile of the serial acquired basket is meaningful outperformance. So if you can identify, or at least avoid the big mistakes, then your selection process can significantly even enhance that benchmark, let's say 15%. So that's the aim. Our goal is obviously to always invest concentrated and find the best of these companies. So that's
So if we get anywhere close to 27, then I'm breaking my own word, what I just said. So this is very hard to achieve, but
yes.
those numbers are really, really up there. Now, the big question is, of course, so how have you done P&R? So the next slide tries to capture that one. Here we are. This is titled "We Discovered Serial Acquirers Early." And I think serial acquirer, that term has become quite popular over the last few years. But when we started was, I think, in 16, when we looked at companies that weren't called serial acquirer, they were called buy and build,
Hmm.
or something like that. And you can see this is the list of the investments we've done in the fund. We started in 16 with Georgia Scientific. We speak about it a little bit more, and we bought it at 14. This is measured from the very first purchase, right? To be clear. So this column is looking at the first purchase and then comparing it where the stock trades right now. I think it's as of yesterday, 4th of February.
Yeah.
Yeah. And that's then the resulting CAGR on the green column. We have done more purchases and also sales over time then, which is not captured in this one. So it's a simplistic way to measure the performance. However, you can clearly see it has worked. So the more recent ones have really worked out very well with still early days because the time frame is short. For example, the top one, NGTG, the one in Japan, we bought it around 4,000 yen. It's now 9,400, was even above 11,000, I think. And of course, that's still very early, but it has worked quite well so far. perhaps we can run through the different companies because I would think that very few of you, unlike your professionals here in this game, have heard about those companies. Um, so shall we do a quick run through the names?
Sure.
Okay, you start. NGTG. Quick
Yes.
one. What does it do?
So it's a serial acquirer in Japan. It buys family-owned manufacturing businesses in Japan, solving the succession problem that I mentioned earlier in Japan.
Okay, next one, TerraVest, company in Canada. They buy something really very old school, which is you probably might have seen gas tank vessels sitting on some industrial compounds in Germany, might be Prima Gas or something. And they invest into the manufacturers of these steel vessels, sometimes also with wheels, so Tanklastwagen in German. And there are a huge number of mom and pop businesses in Canada, sometimes in the third generation, who are manufacturers of these kind of steel-based tanks. And TerraVest, amongst some other adjacent areas, acquires these companies. And they've done that phenomenally well
Yeah.
at very low multiples, and you can see that has worked really, really well so far. Third
Software,
one,
I
Software
think
Circle.
that one you can take, and then I'll take Technion. Maybe.
Okay. All right. Software Circle. Well, I'm the chairman there, as I mentioned before. It's a really really nice company. Obviously, I'm biased,
Is
right? So
it?
maybe I should not do it. I shouldn't. I should refer to actually the Software Circle's investor relation page because this is not the right format to discuss it in depth. However, just the background. It was a company involved in graphic design and printing. They had a little bit of a software part already in the business, and at some point, um, I helped work on a big transition from that old business model into becoming a serial acquirer in software in niche VMS companies. So far, it's worked very well. We have a super team there with Gavin as the CEO, Gavin Cockrell doing a phenomenal job with his team. And I couldn't be happier with
And
how that is
yeah,
developing.
and I just want to say that on Software Circle, it was sort of I've seen the whole journey where it was started off as just a more on the investment side, but then seeing Matt along with the whole team there doing this on an operational side has been, I think, a great journey and great success so far, and also a great learning experience for us on the operational aspects to apply it also to the investment side.
Yeah, it's nice to see a company from the inside that adds a lot to our understanding as an investor from the outside.
Yeah.
Next one, Technion.
Yeah, Technion is one of the, as you can see, the KGAR is going through some challenges. We really love the one aspect we've not mentioned, though, which we may want to talk about, is all of these companies are have very strong alignment and ownership mentality, where you'd usually have a founder-led CEO leading the company, which gives us a lot of trust in the long-term success. So that exists at Technion. They buy small industrial businesses in the UK and in Sweden. Their business is a little more cyclical, so they're having going through some little bit of a turnaround right now, but we are confident in their long-term prospects.
Next one, Kelly Partners, KPG. It's an accounting serial acquirer, so acquiring small SME accounting practices. Started in Australia, moved into the US, also looks into the UK. And the financial engine, I think a few letters back I mentioned and I described and analyzed the financial engine, has enormous horsepower because they can structure it in a very capital efficient way. Stock price has gone down a lot. I think it halved over the course of the last 12 months.
Yeah, well,
Uh,
last
so
6 months, yeah.
last 6 months even. So there's a lot in there. And the question is, of course, is this a reason to sell or is it a reason to perhaps buy more? So we can talk about that also later. Next one, chapters.
Chapters is another example of where we've been super successful in partnering with the founders or people with the initial idea at a very early stage before it was fully implemented as a vision, and it's done amazingly well for us. It has in the same business as Software Circle, but in Germany. So a lot of you may be familiar with it already, where they're in the serial acquisition of vertical market software companies in the German space.
led by Jan Moore, a very good friend of ours. He used to run a fund like we do, and then made the switch and said, "Look, I think I can add even more value by becoming a CEO," and that's been a fantastic journey. Uh,
AFH, I could,
AFH.
oh, I can take. This was sort of my first early years in with Matt, 2020. So early in the
Oh, do you
journey.
remember? We have to tell the story about the Rolls Royce in front of
Yeah,
it. Yeah.
yeah. This was one where went to the parking lot as we usually do. We love to meet the
First,
CEOs.
first tell what it is.
Oh yeah, it is again a company that buys small wealth management businesses, which provide services for professional financial advice for, let's say, high net worth, but also medium net worth individuals. And these wealth management businesses we found are super sticky. So AFH is a business that was doing this in the UK, and this was my first, as I was saying, introduction to this model. I know you Constellation Judges were even earlier, but I really did my research, and that's where it really struck me that this business model is really wonderful to create shareholder value. And the story, do you want to go in?
Yeah, so I think amongst the viewers will probably be some wealth advisors. This is a wealth advising serial acquirer. And you will know that your customers, I hope, are very, very sticky. So the attrition rate is quite low. You can compare that really sometimes with software. Um, we haven't spoken about the AI risk, but generally in terms of sticky software, attrition rates less than 5% are deemed to be top notch. And you can see that sometimes with wealth managers. In any case, we visited them and there was a big parking lot with a lot of cars, and then there was the complex building of the offices. And in front of the entrance was a what was the color? It was like a shiny metallic color of a Rolls-Royce coupe with AFH as a number plate or part of the number plate. And right there, we already thought like, okay, shall we turn around and go back home because this clearly is not the type of business we'd like to invest in. And we got over it, and because we then visited the inside of it and went into the office of the CEO, had time with the CFO, CAO, and so on. And it turns out everything else was quite frugal inside his office. And his point was that he uses this car almost to entice customers, right? And show off and say, like, look, obviously AFH is a great company. Look at the signal here. Well, we only had it for not long, right?
Like a
It was
year, or
like less than a year, I think, even.
it was taken out by private
Yeah,
equity.
it was an interesting one where we, of course, tried to get a better price, but we didn't have a big enough stake to change that, so we had to let go of that. Apparently, it's been doing quite well since then. They're quite aggressive in terms of buying more and more IFAC in the UK. Okay, next one, Constellation Software. Well, I think that is well known. It's an interesting one because it's been phenomenally successful up until recently. The stock price went down quite a bit because of AI concerns. But it's the poster child of serial acquisition. Since then, there are many more smaller clones, you could say, from Constellation Software that try to do the same. Amongst them, of course, is what we do with Software Circle or Chapters Group in some overlap there. It's not exactly what Constellation does. There's a lot of difference there. But anyways, Constellation Software is a phenomenal company with a great DNA. There's lots to learn about it. There's a lot of stories there. I think back when I first looked at it, I thought it was a fraud, and the numbers just looked too good. And I reverse engineered the multiples that they apparently had to pay for these acquisitions, and I looked at it and thought like 4 times. So they're buying companies, software companies at 4 times. That can't be. And then I started to work with some interns. That was before your time, and we said, you know what? Let's just copy them. So we set up a company for research purposes and pretended we'd be an acquirer in the software space. And we came very close to an acquisition until the point when I really understood what they were doing. And then I said, okay, all right, I understand enough now, so we can cancel or stop the research project. And I said, no, we can't acquire the company, obviously, because we're on the fund. And guess who bought it then afterwards? It was Constellation Software.
Yeah.
So that was the research I did to then decide to buy Constellation Software, and then later on we sold it. One of the reasons was because we, well, actually went into the smaller young elephants and used parts of their template to do it within Software Circle and Chapters. And the last one, Judges, you want to?
Yeah, last but not least, I'd say it's been the one we've held for the longest, and it's still a part of the portfolio. And Matt's gone into it in more detail in the letter, and they buy at very disciplined acquisition multiples, scientific instrument companies, mostly in the UK, but now they're also expanded to look outside. And I think they have a great track record of deploying capital, which we might go into a little bit more. So I won't spend more time right now on this.
Okay, shall we move on then with the slides? So this is actually picking up on judges. I think today is well, basically the last few days were quite a lot of turmoil in the market, and even longer back, you see quite a lot of turmoil in terms of judges. So you can see the stock price here going down from the peak at around 120 something, close to 130, I think, or at least slightly above 120, all the way down to 42, 3 or so, I think, in the
Yeah,
trough.
45 was the trough.
And
Yeah.
now it's around 50, I
Hmm.
think. So significant retreat and decline in the stock price. Now we had bought. I hope you can see the mouse. We started to buy. Well, this is in 2016, I think, and we bought the first shares at around 14 and a half, I think,
Hmm.
pounds. And you see here the years of ownership. So we bought more on the way up. And at some point, we started to become a seller. So we reduced our position, I think, around 60, 70, 80, 90. Whoops, about those levels. And then we still had a small position when the stock hit the peak valuation here. And since the decline, we participated with a small position. Unfortunately, on the way down, we started to buy in at some higher levels now. And I think, as I wrote in the letter, now it's potentially an interesting valuation now. And I think what would be useful for all you listeners is really to, and viewers, to make the connection between the chart, i.e., the price, and value. And the best way, I think, about doing that is by looking at what I would call the financial engine. And here is the last 20 years. Now, 20 years is because this is how Judges started under the leadership of David Sicurel. So he founded the company and he raised very little equity back then. I think he started in 2003,
Three,
right,
yeah.
with the first idea of being a turnaround fund, but then changed to the actual serial acquisition strategy in 2005. So we start here at 2005. And perhaps this is a good way to spend some time on the financial engine, because this is the leading thing. So if you want to know where the stock price likely is going to be in the next years, look at this, because the price will follow the economics. And here you can see, at least on a history basis, oh sorry, you can see, can I zoom in a little bit here? Not sure I can
I
zoom,
don't
but
think you can
I
unless you
hope
escape. But
I hope you can zoom in on your screen at home. But otherwise, this table is in the letter, so you can have a look at that letter. I think we could spend some time on this really, and really explain to you why we like this, and not only about judges, but how you can use this as a template for great serial acquirers. I think the first one, of course, is the top line is revenue, and you can see it's grown from 2.2 million when they started to this last year. It's still expected, not announced, 140
yeah,
something. So tremendous growth. And then, of course, owners' earnings or adjusted earnings. I think it's the same number here. We agree with their adjustments. Is has gone up tremendously from two p per share all the way now to 275. You can see in 2023 it was already at 376. So the last 2 years the earnings have declined quite a bit. Nevertheless, the CAGR over those full 20 years is at 28.7%, right? And
and the
that
stock price is also, yeah,
and that's what
23.
makes you rich. So the stock price
Mm-hmm.
is at, it's down here. I hope you see my mouse is here, is at 23.3%. Now, it's unusual that the stock price CAGR over a long time is below the actual EPS or adjusted earnings here, CAGR, right? What does that tell us?
Yeah, it might be a good time potentially to look at judges again. There's also an accounting aspect where maybe the starting point, of course, is very low, right? The earnings per share.
Yeah, yeah.
So, but yeah, in general, usually the over definitely in such long periods, the stock price CAGR is very close, should be closer to the EPS CAGR.
Yeah. Now, what's so great about this engine? Let's look at it. So this is earnings per share. This is earnings. So the difference is always important if the company issues a lot of shares and thereby dilutes the earnings per share. So what ends up in our pockets is the per share value. So that's what we care about. Well, what does the company spend the profits on, the cash flow on? Well, here, CapEx and M&A spend. Well, you see that the bigger of the two certainly is M&A spend. So in other words, the acquisitions, the deals that they are doing. And I think what is really important is to, over time, compare what percentage of earnings the company reinvests into acquisitions. And here you see, oh, fantastic. It's a round number. It's all of their earnings, right? So 100% they've spent, albeit with a lot of ups and downs,
Yeah,
right? So there are years like here, 18, 19, they almost
lean period of
did nothing.
reinvestment. Yeah.
And then some years they were way higher than 100% and they use leverage to do that. Um,
Mhm. Time.
okay. We hear that we need to move into Q&A soon. We will. Um, in any case, so here we see the engine, recycling a lot into M&A. At the same time, they still pay out a dividend. What do you think about dividends?
Don't love them.
Well, I remember I once spoke with David Ciccarelli, who was a fantastic company builder and a great CEO. And he actually is about to resign, I think, just on next week, I think,
Mhm.
right? Move up to chairman. He's now 75, I think, 75, 76. So I think he deserves to retire at that age, but he's done a phenomenal job here. Unfortunately, in the past few months or in the past year, the stock price declined. But nevertheless, still, I think he's accomplished something really great, which you can see clearly by those measurements on a per share level. And I talked to him once about the dividend and said, why are you paying out the dividend if you can use the cash and acquire more companies at multiples that are extremely value creative, accretive? And he said, "Well, Matthias, yes, you might be right on your math, but think about it. I promised my original shareholders that you get a dividend and that we try to increase the dividend in a consistent matter." And I think that is also true. So I thought, okay, given that I'm fine with the dividend and please do what you do. And you can see the dividend has been growing consistently over those years, which is quite nice for the early shareholders. Had he reinvested them at 5 times multiples,
Yeah, hypothetical, but yeah, the outcome might
we
likely have been
we
better.
could work out the math. But you can actually work out with Excel, what the difference would be, making a few assumptions there. However, so that was a deep look into the engine. Anything else you want to add?
No, no, I think we can leave some time for Q&A. I
Okay.
don't know. And so a couple of them are in German, and I think there's one more slide, but maybe we touch on the Q&A and then go to the slide, or what do you prefer?
Okay, I have one more slide. I don't know what time it is. Let me see
It
what
is
is
40, so we're at
40. Okay, we need to make it quicker. Yeah. Um, so we need to go into Q&A, I'd say. Perhaps we cover the AI part, which is here on the
I can
on the move as
stop
well.
screen sharing also so that
Oh,
I
here
can
we
see.
go.
Yeah.
Yes, fantastic. Okay, here we are back. Um, all right, so let's move into Q&A. We have the first question in German. Bitte noch ein paar Takte zum Spannungsfeld investieren als engagierter Owner und Compliance bedenken. Okay, can I do it in German?
Yeah, go for
Okay,
it.
also ich mache es auf Deutsch. Das ist ein wichtiges Thema, nämlich das Thema Conflict of Interest. Also es gibt natürlich Situationen, beispielsweise wenn man im Aufsichtsrat sitzt und die Company selber zum Beispiel eine Aktienemission plant, also das Einwerben von mehr Aktienkapital, um vielleicht Deals zu finanzieren. In der Situation hat man zwei Hüte auf. Der eine Hut als Investor sagt, ich möchte einen möglichst niedrigen Aktienkurs. Der andere Hut als Company Board Member ist, nein, nein, ich möchte einen möglichst hohen Preis, weil es ist besser für die Company. Klassische Conflict of Interest. So, Governance-Regeln wissen das und es gibt eine sehr ausgeprägte und sehr detaillierte Governance-Regulation für diese Fälle. Der Fakt ist ganz einfach, bei all solchen Situationen exclude ich mich oder wer auch immer auf dem Board ist von diesen Entscheidungen. Und deswegen gibt es auf jedem Board Independent Directors, Non-Executive Directors, die in diesem Fall diese Entscheidung besprechen und die Entscheidung treffen. Also es gibt ein klares Regelwerk darum, aber es ist ein wichtiger Punkt. Mein Hauptinteresse sind die Investoren in unserem Fonds. Das ist unser Fonds. Darum geht's. Und der Grund, warum ich auf dem Board bin, ist ganz einfach, um mitzuhelfen, den Wert für unser Investment weiter zu steigern und natürlich auch das Investment ein bisschen zu kontrollieren, zu gucken, was dort passiert. Nächste Frage. Herzlichen Dank für das Meeting. Softwareunternehmen fallen ja zurzeit stark. Ja, zum Beispiel Chapters, aber auch Kelly Partners leiden stark, wahrscheinlich wegen der Gefahr der Disruption durch KI. Super Übergang. Wie schätzen Sie hier die Lage ein in Bezug auf Ihre Unternehmen? Okay, so I would say let's bring up the
Are you doing
slide
this in
again.
English? Or
Yes.
okay, then let me just change this back 1 second. I think
Oh, we have to change
this is a
the
good time for the slide, yes. Yeah, just make it larger.
Okay, so it's also in the letter, so you don't need to photograph it or something. Categorically, we think about the AI risks in terms of three buckets. The first bucket is the self-thinking bucket. So you can read it here. It's something where a company just simply sells the brain work, the thinking aspect of it. And I think those companies are really at risk. Examples, call center.
Mhm.
The second one, embedded thinking, that's where software or Kelly partners fall into. This is where the thinking part, in terms of Kelly, it's, for example, all the activity that you do within the accounting practice, moving data from A to B, filling it in, filling out forms, uploading stuff, etc., is embedded in the whole transaction, in the whole product. And there, I think it's a double-edged sword. And you see the same with software. On the one hand, AI can take out a lot of costs. You can become much more efficient. On the other hand, if the customer also knows that, the customer might say, I'm not willing to pay the top dollars that I used to pay because, hey, your costs have gone down, so I want to pay less. Now, it all comes down to the most important thing in long-term investing, which is assessing durability of the mode. So here it's usually switching costs. If the switching costs are high and strong, then I would argue that this can be a benefit. If the switching costs are low, then it's probably a disruption or disruption will be likely. And currently, the market is awakening to this risk, and it's a sector problem. So, not a problem, but it's a sector sell off. So, right now, market participants just have awakened up to this idea that everything with SaaS companies and software space might be a danger. So, press sell and run for the exit. And I think in many cases it is justified. In some cases it's not. And the difference is exactly that framework. I've spoken or I've written more about it in the letter. So if you're interested in thinking a little bit more detailed about it, I would refer to the letter. Our companies, I also refer to Kelly partners in the letter and to software VMS companies such as Software Circle or Chapters. I think we think that by and large the switching costs are strong. And I think it can be a benefit, and we see, all the upside also right now happening within the coding space, the development teams, etc. So we are still of the opinion that this is probably an upside for those companies, provided that the switching costs are maintained. So AI has put an interesting new aspect to valuing software companies, and the market is now all over the place, and it has to find some new equilibrium for some time before it will move into some other direction. But we're in the midst of that, and I think just pressing sell is the wrong thing to do. Equally, ignoring it is also the wrong thing to do as usual.
Yeah, makes sense. And how do you think being on the board and chairman at Software Circle, how does that uh, positively or in a different way, how do you see them going through these challenges?
So the first thing is they all are excited to use different new tools. right? Imagine you used a hammer and now you have a power tool, right? You're like, oh, wow, look at that. I can do so many more things with it and I'm be much faster and I can do new, different, exciting things. And it also differs from company to company. Some companies, so some software companies, the customers of those companies aren't really interested because of data protection, right? Data security is a huge issue. Many of the companies are regulated, so they are in some public space. It's often that those are, NHS trusts, for example, here in the UK, or some other public entities. Change there is very slow, and the governance aspect and the regulatory aspect is way more important than, the fanciness of the code or the shininess of the surface of it. The code and the up-to-date part of the code has never been the decisive factor in VMS. Yeah. So let's leave it there because there are many more questions. The last one, I mean, you see in the categories is physical execution. We have companies like NGTG in there, and I think they will be less affected by that for the moment until robots take over the world.
This one I can take this one, which is what's the advantage of a serial acquirer compared to other growing companies, example tech companies, which also claim that they redeploy capital at high rates? That's a very good question. I think the first answer to that is circle of competence. So find something as an investor that you feel that you are great at and you feel comfortable at, and you keep building that muscle. For us, and I think especially as I've gone deeper into this, I find it much easier to understand these serial acquirers, what creates success in this business model. And partly we've spoken about some of those aspects, but one thing is really getting to know the entrepreneur who's running the business. How are they aligned? What are their incentives? How do they see the companies 10, 20 years out? So that's this, we could call it secret sauce that we think feel very confident of knowing what works there. The other, just quick point on the other tech companies. Usually, my what I see is they grow organically much more than rather through M&A, right? So they have a really good engine where they don't need to reinvest much capital, but they grow organically. So what you have to do there is forecast organic growth rates. What we are doing with serial acquirers is to forecast, in some sense, the inorganic. How much capital can they redeploy over a long period of time, which I find for our skill set and more forecastable, but I'll leave that there.
Plus, you have more diversification. You have many more individual subsidiaries in different areas, and you're not, putting one big bet on one individual business model. I think there's many aspects or many advantages for a serial acquisition model, but also a lot of things where we have to really focus on how they do it. Okay, next one. You concentrate. Oh, okay.
I think you missed this one, or you don't. That
Oh,
one.
Judges Scientific. Okay, Judges Scientific, I switch to German. Im Investorenbrief ist von Gegenwind in den USA und China die Rede. Was ist damit gemeint? I translate. So, Judges, there's headwinds in China and US. Perhaps you can take over the US part. I talk to China.
Mhm. Yeah, there is challenges there. That's why the stock price, you could say, in some ways correctly, has gone down. So there's been a lot of funding cuts in the US, mainly led by Trump, and that remains to be seen what happens in the future. One thing we can clearly say is the current earnings for next year that they've given out is sort of a very base level, assuming no recovery. And you can do the math yourself, but assuming even those current sort of, let's say, the lowest expectation scenario, the stock price is priced very modestly.
Well, in China, I think first of all, just basically what it means is that scientists who would like to do project their PhD or whatever, they don't get funded in the US. And normally those are the typical buyers of scientific instruments of Judges Scientific. In China, it is somewhat cyclical, but there's also the trend towards Chinese products, which apparently is happening there. So I think that has played out last year more than this year, or the previous year, I think, than the last year, the 25. But usually you have in different countries, you have different cyclical developments, and China just was a little bit weak in the recent period there. I think we leave it there and move on.
This one.
You concentrate, which is great. and makes sense. Oh, thank you. You get it. This is normally we get the other feedback. But why not concentrate in the sectors you focus on as well? For me, it seems difficult to become an expert in so many industries and sectors. Oh, that's a very good point. Thank you for that question. So I first, many years back when I went to Omaha to go to the Berkshire Hathaway meeting, I thought, how can I become an investor in Berkshire Hathaway, which I was, and not really knowing all the underlying businesses well, right? I knew a few, but not all of them. And it took me a while to really make that hurdle. And then I looked at Judges Scientific in 2016. And there again, I thought, am I an expert in these scientific niche manufacturers? And the answer is clearly not. However, what I became comfortable with is the the essence of the moat of those companies. And more importantly, the CEO on top of it, in this case, David Cicurel, as being the capital allocator and the decision maker in what companies he's going to buy. I didn't need to know the last detail of those underlying companies, even though over the years I think we've become much, much better. But knowing what type of companies he's buying and what constitutes the mode of those companies. I think that's the best answer I can give. Next
Great.
one.
Great. I took a look. There are quite a few questions, so I'm sort of summarizing them and two or three of them, and maybe after that you could take this one. But there's a few questions on how we think about valuation, and because as you said, serial acquirers, some of them go up, and it's a popular theme, and everything comes back from our lens to as this. You could call it simple, yeah, but not easy. Price versus value. So everything is in the lens of what do we think is the future cash flows of a business, as you said, and then what's that's the V, and then how does that compare to the current price? That's how we make all our decisions, both when we are buying and when we are selling. And I find that super powerful tool, which is, and we apply that on a daily basis. And that's our metric for dealing with the valuation side of things, which I think few people had questions there.
Okay. All right. Next one.
I don't know if this one's something you wanted to.
Okay, in German. Inwieweit beeinflusst das generelle Zinsniveau die Beurteilung der Attraktivität von Serial Acquirer? This is a good one. So, I mean, interest rates always have as we all know, a huge impact on the economy. In terms of the serial acquirer specifically, it has an impact on the funding ability, right? So if you need money to acquire companies, you usually take equity, but you can also take part of the purchase price and fund that through a debt financing agreement. And so there, of course, the interest rate has an impact. The higher the interest rates, of course, the more you have to pay in interest. So it has a negative effect. However, much more than the height of the interest rate, it's the structure of the debt. You know, what kind of covenants, what kind of tenures, what kind of structure in terms of, is it an amortizing loan, is it a bullet loan, etc. you have, I think has much more impact on the ultimate outcome in terms of return on incremental capital to us shareholders. So I leave it there, but it of course has an impact.
Okay, this is a fun one. What kind of books are you reading these days?
Okay. So look, I thought about some ideas. I think we are overrunning here, but who cares, right? I mean, if you,
Whoever wants to.
yeah, we on a run here. So I selected these books here. Um, and it's not something we recently discovered, but it's better than that because those are the evergreens. Um, which one would you pick and say a few words
Oh,
to?
I think you know which one I'll pick. This is my Bible that I it's sort of I find my best business book for me about capital allocation, and we were lucky enough to know Will and also work with him on some projects and investments. So yeah, this one, if you've not read it, I would highly recommend it. That's my favorite.
And it's all about capital allocation from the viewpoint of CEOs, I think super important. This one, Principles. This is your former company.
Yeah, Ray Dalio. Yeah, he's a interesting, and of course super successful in terms of funds. And yeah, that's something we applied day to day.
Would you recommend it?
Oh, good question. I think yes, maybe I'm biased because I had to see it every day. So now it's too much for me.
So a special culture there. You can talk to Akash offline if you want to learn more about it. Then here's one. This is a painful one.
Mm-hmm. Mm-hmm.
It's the book by Vernon Hill on Metrobank. It's a company we have invested in, and it was a, let's call it positively, a learning case. So we lost quite a bit of money there. It's covered in one of my letters, but this was his book, so I put it up here. So it's not all positive. The really good one for businesses are Good to Great, Evergreen, Jim Collins. I think very good learning there. And the last one, I think this is a bit off-beaten, from Jan Wallander, The Handelsbanken Way. And it's a book about decentralization, which is a core element of successful serial acquirers. And this is probably something we should just mention. The playbook of a really great serial acquirer has not the desire to create synergies, which is typically the case is if one company acquires another one. But the really successful ones, often to find in Sweden, leave the businesses decentralized and let them run. They manage the managers and interfere very, very carefully only with the business, if at all. I think that's a trademark of a great serial acquirer.
Yeah. So we have few last few ones. This one, let me just change the translation language if you want to read it out in German. But quickly, here we go.
Ja, Constellation Software ist durch den Softwareabverkauf am Markt massiv gesunken. Ist dieses Business Model nicht mehr attraktiv durch den AI-Shift oder waren die Gründe für den Verkauf oder was waren die Gründe für den Verkauf der Position? Ah, okay. Constellation Software, when did we sell it? Many years
Let me
back.
just change the language.
Yeah.
Yeah. Oh
Um,
yeah, in 2020,
Yeah,
COVID.
so that was way before AI, and the reasons back then were price versus value. We found some other companies that traded at a much better valuation, and then we decided to, sell down Constellation Software and buy other companies. And then also we still kept on observing then, and then we of course started out on the what we call the young elephant
Mm.
strategy and investing in earlier clones or part clones, like as I mentioned, Software Circle and Chapters.
Yeah, exactly. And one point on this whole topic of valuation, how do you make decisions? Because that's a recurring theme. I think what we do is we keep track of every decision we make. And what that means is
Yeah.
if we sell Constellation, what did we buy? And how has that done in relation to the selling? And I think that's super useful and also important because you can fool yourself, but the data doesn't lie. So we keep track of that for every decision we make, for example, a sell decision, and we record the buy against it and see how that's done over time. And that's been a super useful database we have over time. Again, all linked to price versus value.
Yeah. Next one. Given the increased market volatility and higher discount rates, how are you thinking about concentration risk in your highest conviction positions, such as Software Circle and Terravest? And then I have to add the one below, collapsing more than declining. That is, this is the sign of the time. I mean, if you use language that, speaks to your emotions, like collapsing or dying or imploding or something like that, it creates fear, right? And fear is usually not a very good advisor for sound investment decisions. I think what you want is not getting out quickly if everybody else selling. If everybody wants through the exit door, you get the worst price. What you want is clarity. And clarity is something where you are not emotionally biased as best as you can, because we are all emotionally biased usually, right? There's a whole lot of stuff you can read about biases, but using language like collapsing steers up that. We always try to look at it as a matter of fact, right? We look at numbers. But having said that, yes, you're right. There's a sector sell-off happening right now. And that's yeah, that's you get that from time to time in the stock market. And we've been in this for quite some time, and we are aware of how we act and so on, and we have volatility. And I think it's very important to say that with our portfolio, especially in small caps and in a concentrated way, there is volatility. You can expect volatility, or you must expect
Hmm.
volatility. If you are just emotionally not in the position to stomach that, I do not recommend you to invest in our fund, right? We are not trying to create a smooth line from bottom left to upper right. because we know that maximizing CAGR over long periods of time by using some sort of smart hedging technology will only cost you performance, right? It always sounds great, but it doesn't work long term, right? That's our conviction. And I think if you're longer in the market, you will come to the same conclusion. But addressing this company, so how are you thinking about concentration risk in your highest conviction position? Well, it's a very important point. So there is, of course, two aspects. One is illiquidity, because we're in small caps, not all of them. We also have liquid stuff, but some of them are illiquid. And the other one, we have some conviction trades where we have bigger positions. So we have to take that into account. And in terms of price versus value, it has to be risk adjusted, right? So the return have to reflect the additional risk that we take there. I think that's the best way to answer that, right? Without going,
Yeah,
yeah.
yeah, I think so. Yeah,
Okay.
nothing else to add.
All right.
I think these last couple,
3 to go. Already got
no,
subtitles for
that's fine.
translation. Okay, okay, that's fine. With this answer, then only 2 to go.
Will you be translating this and answering in English or German? Then depending on that, I'll change for
Ja,
everyone else.
so I think it works if I do it quickly.
Okay.
Ich war überrascht über den Einstieg bei Fairfax. Da diese nach meinem Verständnis kein Serial Acquirer sind, gibt es hier eine andere Investment Thesis. Yes, I think that's a good observation. We never said we only do serial acquirers. We just like it
Also, the
because
question is how is there Fairfax in the portfolio, even though you say you focus on serial acquirers? Is that the theme of the question?
I think that's how I understand it. So the fund is not a serial acquirer fund. It's a fund that tries to maximize over long periods of time the performance. But if we look at price versus value and our capabilities of analyzing companies, we do like certain serial acquirers, and that's why we are quite overweight in those business models right now. If those valuations go through the roof across the board, we then pivot and go somewhere else.
Yeah.
Right. And we just also find some other companies that are not necessarily serial acquirer that are great in terms of their outlook, in terms of essentially price versus value, right? That's
Yeah, and I'd
what it
also
boils down to.
add on Fairfax. You can use the same mental model for a seat that you do for a serial acquirer for Fairfax, because Fairfax is in a sense a young Berkshire. And what does Berkshire do or Fairfax do is they take the capital they get from the insurance business and the float and reinvest it into private companies, public companies, and in growing their insurance companies or buying back their shares. So in some sense, it's a very similar lens to what we use for serial acquirers, and we see the model working very well there in the same way that we do serial acquirers at a much lower multiple. So I just wanted to add that it's not very different from how we think about serial acquirers. But that being said, we also have other businesses which are completely not in the mold of a serial acquirer.
Okay.
Yeah.
Very last question. Isn't some of the unnecessary volatility of the stock prices of your companies caused by poor communication with the market? What do you do about this in your discussions with management teams? Poor communication with market. That's very specific.
I don't know which one we're talking about.
Not sure whether you have any specific thing in mind. I think it's the volatility just comes from the fact that you have a limited amount of buyers and sellers. And sometimes when you look at the daily volume in those small cap companies, you don't see much, and then you see boof, a big block trade, right? So, and this is basically the price finding mechanism if a larger block is being traded because there's an individual negotiation happening between buyer and seller at a more meaningful amount of shares, and that can spike up the price or push it down. I think there is this aspect just driven by illiquidity.
But in some ways, I'd say we're not really solving for companies that are like they have credit acceptance, which is pretty frugal in communication with the market.
Oh yeah,
The multiple has always been low, but that gives them the opportunity to buy back their shares. So in some ways, we like it when
yeah,
companies are sort of as long as we trust the management, we like it when the companies are not overly
yeah.
communicative or trying to sell their stock.
Yeah, I think there's this aspect, there's some CEOs who are really spending a lot of time on speaking up their stock, right? Basically going to roadshows and spending, I don't know, 40, 50% of their time on speaking with the potential investors or with the existing investors and just trying to massage up the stock price. We are not interested in those companies really. I think it's much better if you're a long-term investor to let the CEO or also ask the CEO how much time do you spending on the actual business. Because again, the stock price over long periods of time will follow the underlying operating earnings development. And you should, as a CEO, my point is you should be focusing on that and just accept that the market, Benjamin Graham called it Mr. Market, does its thing. Sometimes
Hmm.
it's optimistic, sometimes it's pessimistic. On SaaS companies right now, clearly Mr. Market is very pessimistic and throws everything into the bathtub there, which I think doesn't make sense. So
And then the best companies are those which can take advantage of the dislocations through buybacks, if it makes sense from a
yeah,
capital
yeah.
allocation
So if the stock is undervalued and let's say management knows it, you can redeploy capital into buybacks, which is great for long-term shareholders because you create value through that, right? So yeah, we do like companies that are quite humble and modest in the way they communicate, and they just focus on their operating business rather than being on every show every day and talking up their stuff. Um, I don't know how Elon Musk does that, by the way, right? I mean, the amount of time he spends on behind the microphone and then also running all these companies. I mean, I'm quite fascinated by that.
is special.
Speaking of time, we are,
I don't know if there was a last one that this one, did you want to cover it or you already looked at it?
das Volumen vom P&R ist relativ klein. Könnt ihr davon leben oder seid ihr finanziell unabhängig? Haha, very good question. Well, first of all, I think
So what was the question?
yeah, the volume of P&R is relatively small. We are at 70 plus million AUM. Can you live of it, or are you financially independent? Well, fair point. So the main part we are really of our wealth making aspect is the performance fee, right? So the running costs are really just to pay, for the roof, the tea, for the seat, and you get the idea. For us, we only want to get paid through the performance fee, in such a way that you as an investor, you benefit, you have a good performance, and then we get paid out a chunk of that performance that we generated, and that is the big link there. Because we are in small caps, we cannot deploy billions of euros. Therefore, the performance fee is quite important in that equation.
And also, I would not want to have to be honest, not to be 10 times larger, or well, 100 times
Well,
larger.
we could be larger.
It
I
could
mean,
be,
having
yeah,
said that, we could be larger. There's more ways to deploy more capital. So and
yeah.
and we are welcoming any long-term, truly genuine long-term thinking investors to speak with us. If you have questions, reach out to us. We are very happy to have a
Mm.
chat and discuss what we do in more detail.
But just,
Um,
I think one important point is that I've noticed in this industry, there's two types of investors. One who are trying to maximize your amount of AUM, and on the other side, maximizing your lifetime CAGR, as Matt said earlier. And it's very hard to do both. And there's a clear link between higher AUM, significantly higher, leading to decline in performance. And you'll see that in a lot of funds. And we never want to be in that position, I think, where we have to compromise our decision making for the sacrifice that for larger AUM. And I don't think, knowing what we've done so far, that that'll ever come to that point. But yes, as you said, we could
yeah,
definitely have more scale than we have today. But I also, the other point, I think, choosing which game you want to play and succeed in. AUM
yeah,
maximization,
yeah.
which I would say Bridgewater in some sense is more towards that side rather than just maximizing Hagar.
Yeah, and you've seen both ends, right? This is a very small operation, and then you've seen Bridgewater with I don't know how many thousand
Yeah.
people and billions of dollars to deploy.
This is much more fun
Yeah,
and likely higher Hagar, I think,
yeah.
yes.
Okay. Oh, okay, that's good to know. All right. Anything else?
I think that's it.
Okay. Um, I think that was a start. I think we overrun. I have no idea what time it is, but I think it's probably overrun by the 45 minutes. I hope it was good for you to get a better view of what we do, how we do it, who this gentleman is. Aakash, it was important for me to introduce Aakash also as a co-pilot to most of you. And should you have more questions, please reach out to us. And we hope that the current turmoil in the market gives us plenty of opportunities. Expect turmoil also in terms of the valuation. That is part of the game. It's nothing, again, let's leave it with this comment. It's nothing for people who want to get quickly in and out. The fund is not for you, but for everybody who's interested in long-term investing and finding partners who really find great businesses and go along with those business managers there. I think we can offer something, and hope to meet you. All right,
Thank you. Yeah.
good. Any last question you have, or any last ending? We should create a tradition or something. Oh, didn't
Uh,
you have a question for me?
Oh, I did have a last question if you're interested. It's sort of these in these podcasts, you have these last final question or
Yes.
tradition. But okay, well, what and maybe it's useful for any young listeners or in budding investors or thinking of starting their own fund. What would you tell a Matt who was 20 or 22 years old to do differently, knowing what you know today?
Oh, the question for me. Okay. I have a son who's now 19 years old. And of course, we try to pass on all the stuff that didn't work out for you to your son. The thing is, my son knows that. And he says, don't go on with all the thing that you struggle with. What would I say? Mm, there are these wisdom questions, Akash. Now I'm thinking too much. I think I would say be interested in how things work. Figure out how things work. And don't spend too much time on TikTok and YouTube and other things on the electronic side. Build your network. I think that is
Mm,
something AI can't disrupt,
yeah,
right? Network building. I mean, that is something that I would urge you to do. Try to really figure out who are the great people in the field that you're interested in, and figure out how you can get in contact with them. That's what I would say.
yeah, that's a good point. I don't think about that enough, and generally don't spend enough time on building the network. But completely agree. And ideally, if you can find something that you love to do, like we do.
That's right. Okay, with that, we have to go back to our Excel sheets and valuation. All right. Thank you very much, everybody, and hope to see and speak to you soon.